I was just in an accident and the insurance company totaled my car. What happens if I owe more money on the car than the insurance company is offering? Hi, I'm Paul Hernandez, attorney at Kalfas and Ackman, litigating cases across Virginia and North Carolina. This is a situation that happens more often than you think. Cars are expensive, which means people have to take out larger and larger loans to purchase cars. Lenders are also lending money on a car for extended periods of time. Years ago, a loan on the car would be 3-4 years. Now lenders are increasing their lending terms to include 5, 6, 7 years to finish paying off these larger loans. The problem arises because the car's value decreases faster than the loan amount, which means you may owe more on the loan than the value of the car. If you own a car for the entire term of the loan, there's no problem. The problem arises when you are involved in a wreck and the cost to repair the car is more than the market value of the car. When this occurs, the insurance company declares the car a total loss and they are required to pay you the market value of the car at the time of the collision. They are essentially buying the car from you at the market value. Sadly, the law indicates that the value of the property cannot exceed the fair market value of the vehicle. This becomes a problem when you owe more money on the loan than the value of the vehicle. The insurance company will pay the lender the value of the car, and you are personally responsible for the balance of the loan. In this scenario, you will be paying for a car you no longer own. Additionally, you do not have a car and you do not have any money for a down payment for a new car. There are a couple of ways to prevent or minimize this problem. The first thing you can do is purchase gap insurance when you buy and finance your car. Gap insurance will pay the lender the difference of the amount of the loan and the value of the car. That way, the loan is paid in full. Please do not be fooled. It rarely covers exactly the difference. There is always some valuation issue. Many times we see a problem when the client fails to make the next payment as it becomes due right after an accident. Additionally, insurance companies drag their feet when deciding to total loss a car. During this time, late fees and expenses can accrue which are not covered by gap insurance. Please see our gap insurance video for more information. Another way to minimize the difference in the loan value and the market value of the car is to look at carefully and challenge the valuation report you get from the defendant's insurance company. The insurance company will want to pay the very least they have to buy that car from you. So they will nickel and dime the condition of your car. They will forget to include the driving options like a moonroof or alloy wheels. They will also omit the fact that you just put new tires on or a new transmission in the car. You will want to look online for comparable vehicles with a higher value and share them with the insurance adjuster. Then demand that they offer you more money for the value of your car. The next thing you will want to think about is how they are going to handle your personal injury claim. If they rooked you on your property damage, don't you think the insurance company will continue their bad behavior when evaluating your personal injury claim? Which makes it much more important that you hire an experienced personal injury attorney to handle your injury claim so you can maximize the bodily injury settlement. If you have questions about insurance claims following an automobile accident, call me, Paul Hernandez, at 888-487-8546. I answer questions like this every day. And by the way, if you enjoyed this video, click on the subscribe button below. That way you'll be notified every time we post a new informative video. I'm Paul Hernandez, and thanks for watching.